Hi there, from Key to C team. We have a special guest today. In honor of Veterans Day, we thought that we would bring in the bigwig of VA loans. This is Kyle.rohrbaugh with Cross Country. He's just down the street from our office. And being situated in this location of Gig Harbor, we've got JBLM, we've got Banger.
Yep, Bremerton Naval Shipyard. We're right in between all the VA spots. We get a lot of veterans here. We get a lot of active duty folks. We have a lot of folks in our military that get stationed around here, as I'm sure you've seen.
Yep.
End up getting stationed elsewhere, and then they come back.
They move a lot.
They move a lot, but they remember their time here, and so we'll get a lot of them that buy a house around here, keep it as a rental maybe, go off and finish their service, and then they find a way many times to return to us. In
fact, I just learned that this location is the #1 desired place to retire for military.
Really?
Yep.
Not surprised, but that's cool.
Yep. Yeah. They all want to, this is their choice. This is where they want to pick to come and do their final stint.
Yeah.
So then they can retire here. So anyway, we're going to talk VA loans. Loans are big news topic anyways right now, because aren't those rates fun right now?
Yeah, fastest rate increase since 1992, since the year started. So that is both painful because the cost of debt has doubled, and it's an amazing opportunity because what it's done is thinned out the worst thing you can have as a buyer, and that's competition. So we're seeing deals again. We're seeing concessions.
Really good point. Really good point. I am going to point out really quick your swing for a soldier, appropriate attire. We just planned this meeting whim, and he just happened to be wearing this, so I love that.
Perfect.
It's perfect. So Permission to Start Dreaming Foundation, go swing. Hi, Packy. Yeah. All right, so let's talk VA loans. Do you want to just give me a quick snippet for those veterans out there that don't know about this opportunity?
Yeah,
what do we got?
VA loan is the best home loan on planet Earth. Just because you are a veteran doesn't mean you have to use your VA eligibility, but it is an amazing tool. The best thing about the VA loan is that your rates are typically a little better than what you can get on a conventional loan or a jumbo loan or an FHA loan. You can go as low as 0 down. You have no mortgage insurance, which is a massive feature that saves money. VA loans are assumable, which is a feature we haven't heard about in a long time because rates have generally been low for the past decade. But if you have a house with a low interest rate on it, you can sell it and someone can assume that mortgage and that low rate. There's a bunch of reasons why VA loans are quite
How nice would that be right now?
Right.
If someone is sitting in a house with a 2.7% rate, they can sell that when they sell their house.
Yes, and the new buyer, veteran or not, can acquire that mortgage with the loan servicer's permission. So that's
a big deal.
Yeah.
That alone is an amazing feature.
Yeah, you can do other cool stuff with VA loans. We did one for a guy last year who bought a 4-plex with 0 down. He got such a great property with solid rents that he lived in 1 unit and the other 3 covered his entire mortgage, the rental income from the other 3. And so there's no other loan in the world you can go 0 down on a 2-plex, triplex, 4-plex on.
Right.
It has to be owner occupied, of course, but there's just cool things that a VA loan enables.
Does a VA have to be on your primary?
Yes.
Okay. That's a big thing to think about.
You can refinance a rental, although you wouldn't right now because rates are higher, but you can refinance a rental with a VA, but it has to be a owner-occupied primary residence, typically. One thing that most people don't realize about the VA, you kind of hear that you have to be married to buy with someone else on a VA, and you can actually buy with a friend, family member, non-spouse if you put down 12.5%. So you need a little bit of down payment, but typically people believe that you have to buy just on your own or with someone you're married to, and you can actually buy with someone else, but that requires a bit of a down payment.
Okay.
12.5%.
But 12.5%, that's still not 20%.
Yeah, with no mortgage insurance.
Right.
Still,
yeah. That's great. Are there any other falsities out there of the VA loan that you can think of?
VA, this is less true now, as sellers, I think, are more flexible to having a buyer and not looking for the perfect buyer who's going to offer, hundreds of thousands over the list price. But VA is typically the bad rap that a VA loan gets is that the appraiser is going to be ruthless on property condition. And there are some intricacies. The VA appraiser is going to peek in the attic a little bit more. They're going to look in the crawl space. They might call out a few things, but it's a lot more similar to a conventional appraisal than most realize. And frankly, now a VA buyer is probably not going to have as much issue getting their offer accepted,
right,
because the seller's just grateful to have an offer on the place.
Yeah, so that should be a note for realtors out there too. I hear you. As a listing broker, a lot of times that if a VA would come in and a conventional would come in, I would, kind of have that conversation with the seller. But they have taken much better care of our veterans in the last 5 years, I would say. So as listing brokers out there, we should not be fearful of that. And a VA loan can be very successful and a good deal. Anything else you want to add?
Another cool thing about VA is that you can use it again, which most people don't realize. If you have some of your entitlement encumbered with a different property, you can use it again with some down payment. You can go 0 down with no limit. So if somebody is a high earner and wants to get a 0 down on a $2 million place, you can do that. Just some cool flexibility with it. Again, because you are a veteran doesn't always mean that the VA loan is the best for that scenario, but it commonly is.
Yeah.
So
Good information. I think we're going to put your information at the bottom of this video. So if you guys need more questions, it's always best to hit up the experts. Just because we're here and I've got you here, I do want you to talk about something else that is big in real estate right now, the 2-1 buy down.
Yeah. The ability to use seller...
Listen up, sellers.
Yes, ability to use seller concessions. Let's say that a property has been listed, the right buyer hasn't quite come along. Rather than just reduce the price, it's way more impactful to a family buying a home to give some concessions and do what's called a temporary buy down. The 2-1 is the most common. There are a few different buy downs. But what it does is let's say rates are at 6.875. It would buy down the buyer's mortgage to 4.875 in the first year. It could save them $600, $700, $800, $900. That's depending on loan amount for the first year, and then half of that for the second year. It goes 2% lower in the first year, 1% lower in the second year. Massive payment savings, way more than a temporary buy down that's just going to, or than a permanent buy down, that's going to be for the life of the loan. Yeah. And the coolest thing about it is that if you can endure this high rate environment, get into a house, start building equity, get the tax advantage, amortize
not compete with other buyers.
Not compete with other buyers, which is going to inevitably happen when rates drop back down. Then you can get into a house with an affordable payment, refinance, and you actually get to capture any unused portion of the buy down when you refinance as principal reduction. So it's
money.
A really cool deal.
There went our light. That's okay. Cash money. They can still see us. It's fine. Our light went out. So there is a calculator that they have that shows for all listing brokers and sellers that shows essentially the difference of reducing if you're sitting on the market and you reduce it by $50,000 versus offering a buy down to that buyer. And a lot of times it still puts more money in the seller's pocket, and the buyer is actually saving more than they would have if the house was $50,000 less.
For sure. Yeah, $50,000 less might save you like a couple $100, but a buy down in your first year can save you $800, $900 depending on the amount. So
it's amazing. It's magical. It's fabulous. We loved learning about it last week. So anything you want to add?
No, that's great. Thank you for your service, veterans.
Yes.
We are grateful for you today and every day. Appreciate you.
Absolutely. Thank you. Happy Veterans Day. And thanks, Kyle, for joining us.
Thanks, Jen.
On a whim. And I hope you guys found this valuable. And if you have questions, reach out. I'll get you in touch with this guy. Talk to you later.